Hello guys, welcome to UCR Forex channel. In this very channel, you guys know we make quality videos about forex trading. We intend to break down forex in a more simplified manner for you to clearly understand how this very thing works. So in this very video, we'll be making a video concerning smart money concept. And please, once again, I want to remember you, please subscribe to this YouTube channel. Try and subscribe to this YouTube channel. Turn on your notification bell so that you'll be getting quality videos or you'll be getting notified whenever we drop the latest videos. We'll be dropping many videos. It doesn't only end in this very particular one because we have more topics inside this very particular SMC that we will still drop for you guys to understand even more about how this SMC work. So have you seen the reason why you need to drop videos? Although when we start proceeding, you will understand the reason why you need to subscribe and turn on your notification bell so that you won't be missing out on our useful content. So this very video is all about smart money concept. Is also SMC. This is one of the strategy in the forex market where many traders normally use. So I wouldn't be making this video to be very long. So I will quickly dive into what I have in this very video to explain to you guys. So normally all about this SMC, the reason why we most traders normally like this SMC is that it enable them to enter along with the big banks, along with the big players. It enable them to know when the big players are entering the market and when they are what existing from the market. So you see the large reasons why people normally choose this word strategy, although there's other strategies available in the forex market. But let's say you want to learn SMC, you want to understand how SMC work. That's why you need to watch this video till the end. Do not watch halfway. Watch it to the end and you understand in details how SMC works. And when we drop more videos, you will equally still understand in more details how it works. So the first thing we have here is what order block. We'll first of all go by defining or explaining what order block is. Then we will head to the chart. We'll go down to this very diagram. Don't worry about this whole thing. It's not long. I'm going to explain it very fast so that you understand something. So we'll look at this diagram, how to spot an order block to understand how order blocks look like, how to spot a valid order block, not you spotting order block that will not play out. So we will understand how to spot all these other blocks, and then we will now go down to the chart to practicalize it. Then lastly, I will show you many trade I won with me spotting a valid what order block. So that is what I am about to explain to you guys. So right now, let's quickly start explaining what exactly order block is. So first of all, they said order block refers to a price zone or levels where large institutions such as those from banks or hedge funds are placed. Do you know what dis are placed mean? Where they place their buy and sell, just like you entering the forex market and placing a random buy or sell. Now you know you don't have enough equity, you don't have enough money, you don't have enough liquidity. All these things I'm explaining is money. Liquidity, equity are all money. You don't have money to be compared to these guys. That is why you need to be entering the market when they are entering, and that is why you need to be existing the market when they are what existing, because they have the power over you. They can decide where they want to take the price to, and that is why you need to follow their footsteps. So we have types of what order block. Don't worry, I'm going to show you how these order blocks look like in the chart. We have types of order block where we have bullish order block and we have bearish what order block. These are the two types of order block I know. If there's only other order block, I don't really know, but these are the only two types of order block I clearly know. So the bullish order block formed after a downward move and marks where buyers stepped in to push price down to push price up. That is, if price has been on a downtrend, then this bullish order block is normally formed when sellers exit the market and buyers step in to push price what up. That is, if price has been in a downtrend like this, then sellers have been the one pushing price like this to the downtrend. Then if there were to be formed a bullish order block, that means the buyers will enter from this very place, you can look from here, and they will push price to the upside. This is where the bullish order block is formed. So then the bearish order block, just like an inverse of this, the bearish order block formed after an upward move and marks where sellers stepped in to push price downward. So let's say, just like as I said, an inverse of this, let me delete so that you understand. So let's say that price has been pushing to the upside, buyers have been buying massively like this. Then if this thing was to reverse down like this is where the bearish order block was formed, because this is where sellers stepped in to push price what down. This was from here that sellers stepped in to push price what down. So have you seen how these two things work? One is loose, one looks like this, one will always, this one is bullish order block, this one is what, bearish order block. Though it's not really order block like this, is when we get to the chart you will see how it looks like, but I'm trying to give an illustration. So let me just take you straight to the diagram before we get to this inducement and clear of liquidity. So look at the diagram. So this is a diagram that is, this is a diagram about the of market in an uptrend. So from here, market has been pushing to the upside. You can see market are pushing to the upside. Market printed a new high and a new low. From here, buyers stepped in and pushed price up and broke all this high, and broke what, all this high. Here automatically becomes our what, order block, because this was from here that buyers stepped in to push price what, up, and broke a what, a structure. Again, from here again, as price retreats, price from here push up and broke a what, a structure. This is where our order block what is formed. Again, from here again, buyers stepped in and pushed price up and broke all this zone. This was where this is our bullish what, order block. From here again, this is where buyers stepped in. From here again, just the same, just how it looks like. So this is where bullish order block is, bullish order block is, bullish order block is, bullish order block is. As we move down, we will understand what exactly that happened inside all these things. So again, look at the bearish order block. They say that bearish order block is where the buyers has been pushing up, the seller stepped in and pushed price down. From here, this is our bearish order block, this is our bearish order block, this is our bearish order block, this is our bearish what, order block. So this is how order block is clearly seen on the chart. Though when we get here, it might look more confusing, but I will try to make things understandable for you here. So let me take you back again to our explanation. So there is something we call inducement. They say a valid order block will need to have inducement, and we also need to have a clear of liquidity. These are one of the two things that you really need to pay very attention. You really need to know how to spot it, because this inducement helps you to know exact whether the order block is valid or whether it is not what, valid. Let's even understand what the inducement is. Inducement refers to the manipulation by smart money to trick traders into entering position at subtonal point by creating a setup that looks like good trading opportunity. This is typically lead to traders into liquidity zone like stop loss or areas which smart money eventually target. Lis ten, is a manipulation. I know that you won't be wanted to be manipulated by anyone, but this is a manipulation by smart money. Smart money are banks, are hedge funds, all these big traders, they are what? Smart money. So they trick retail traders. These retail traders are me and you that has $100, $1,000, $200. These are me and you that have this very, that are these retail traders. That these guys trick us into what? Into entering a position, into entering that buy or sell that looks like that price will play out, that looks like this thing is going to buy for long time, why it will not buy for a long time. And they make this thing look like a good trading setup. They make it look like that of your chart pattern. They make it look like that of your candlestick pattern, a lot of things. Then you'll be triggered to press that your buy and sell. Later on, they will sweep you out, hitting your what? Your stop loss. Now, the next thing now we will be looking at, what? The purpose why they normally do this very particular, the purpose why smart money normally induce you in, normally lure you in. The reason why they normally do inducement is designed to lure traders into position where the stop losses create liquidity for institutional orders. It is often involves creating phase breakout or false support and resistance to manipulate traders into thinking that market will move in one direction. So these guys will just want to trick you in as in to lure you in earlier so that you start pressing that your buy and sell. Later on, they will sweep you out. They will capitalize on your stop loss. They will make more money when they take you out, and then they start taking price to the same direction that you are what that you are buying or selling. So, but it is essential for you to understand how this inducement is seen on the chart. Now let me show you now. Let me show you. So just like as I told you that here is our order block, here is our order block, here is our order block. Reason because here was it is one here that buyer stepped in to push price to the upside. But we want to see how inducement looks like. So as price pushes to the upside and breaks a structure, this is just like a retracement. This is just like a mitigation back to our order block. Then most of us has been waiting for price to get here. All of a sudden, when price got to this very zone, then it looks like price wants to buy. You started seeing bullish engulfing, bearish engulfing, or what? You started seeing bullish engulfing. The next thing, price bought, price retrace, giving you something like a double bottom. And you say, ah, I can see a chart pattern here. This is a double bottom. Forgetting that you have a zone, you have another block below. Then when you enter your buy here, this is where you start buying. Indeed, you are going to make some profit. You are going to be on some profit. Then all of a sudden, they will now take you out. Do you know that when you press your buy, your stop loss will be here? Your stop loss cannot be here because when you place your stop loss here, you might be on massive number of pips that you'll be risking, and you'll be risking a very big capital. So you wouldn't want to be risking all this big thing. You wouldn't want to be risking all this very big zone. So you might have kept your stop loss below here. So when these things start reversing like this, they will take you what out. From here to here might be like 10 pips, from here to here might be like 15 pips, from here to here might be like 20 pips. So maybe this cannot be your risk to reward ratio, and you'll be looking for the market to get to this peak so that you exist in the market. But yet when it got here, it reversed massively against you and took you out. Mitigate the extreme zone, touches the other block, and you see how massive price bought. So here they lured you in, here they induced you in. Just get the word induce. They lure you in into entering buy here using the chart pattern or using some candle what formation. But later on, after taking you out, they went the same way you wanted. Again, look this very one. Price has been returning back to the to this other block, and you can see when price got here, it looks like it's going to buy. A lot of people are entering buy. People that are using trend line liquidity or whatever are entering buy already. Their stop loss are resting below here. The stop losses are here. This is where the stop loss is. And now price pushes to the upside, gave them a little buy and took them out. Their stop loss has been taken out. Their stop loss has been hit. They enter another buy, price bought again, took them out, and they continuously losing. Before you know it, when price got to here and bought what massively. When we get down to the next part of this very SMC, you understand what played out here. But this is how smart money tend to be luring you in for you to be entering buy at early stage, and later on they will take you what out. Again, this what inducement. This is what inducement. Inducement are like trap just before your what order block. So you see, when price got here, they started buying. A lot of people are entering buy from here. Immediately price retrace, buy, later price took them out and mitigate the extreme order block and what and bought massive. Most of you will ask me, does this thing really play out? Is this thing isn't important? Can't I be pressing? When it gets here, I will close. The truth of the matter is that you wouldn't want to close because you'll be looking to keep your TP here. You understand? Maybe from year to year will be like 10 pips. You will not even be satisfied with the number of pips you are making here. That is why you need to understand why you'll be taking trade at the extreme zone. So this is how it is seen on selling on a downtrend market. This is how it's seen on a downtrend market. When price gets here, this is where the seller stepped in to push price down. Automatically here becomes our order block. This becomes our what? Induced or lured area where price wants us to, where smart money wants us to be selling early. And if you fall for this trap, you'll be taken out, and then they uses this extreme zone to what? To sell. Look at another trap here as well. Look another trap here as well. So the truth of the matter is that you really need to understand how this inducement works, because when you understand how this inducement works, you will know when smart money are creating traps for newbies or for traders to enter the market, and you wouldn't be falling for that very particular word trap. So you get, so it is not really all that hard, which I'm still going to show you on the chart. Now What is clear of liquidity? Clear of liquidity is different from inducement. Clear of liquidity or liquidity sweep or liquidity grab or liquidity whatever they attach to the name, there is gonna be you meet a lot of traders that will give numerous name to this very thing, but don't worry, I make this very thing very simplified for you to understand. It can be called clear of liquidity, it can be called liquidity sweep, it can be called liquidity grab, but the full definition of all these things is that it refers to the art of smart money moving the market to trigger liquidity areas, stop loss or pending orders that are sitting above a resistance zone or below support. Now, most of you, what does this thing means? Like, what are you trying to explain? Now, let me give you an example. If many retail traders like me and you have their stop losses above a resistance level, expecting price to reverse, institutional players might push the price slightly above that level, triggering the stop losses and buy orders before reversing price to the downside. This is called liquidity what? Grab or stop hunt. If retail traders have their stop losses above a resistance level, expecting price to reverse, now let me show you on the chart. Now let me use the cell phone. Okay, now see, let's say you place your sell here. They say that this is another block and you can see your induced area. You are not falling for this trap. You place your sell here, market was selling and you're on profit. Maybe when market got here, you didn't close the market, or maybe you are not available to close the market. It started reversing against you. Then you fortunately came back to see the market is already somewhere here. You came back and saw that the market is already somewhere here. You were hoping that this thing will respect this your entry zone, will respect this place that you press buy. See what will happen. See what smart money normally does. They will come and just sweep your stop loss, kisses your stop loss, spike up with a wick, and then start going in your direction again. It's going to be a very painful experience for you, but you just have to welcome it because it normally happens. But let's say that you did not, like, you were looking at this very chart this way. This is what we call what? Liquidity what? Sweep. Can you see? Just get the word right. Liquidity sweep, like sweep, something that is swept out versus something that is lured in. In inducement, they are going to create something for you that looks like it's going to play out, but it's not going to play out. But in liquidity sweep or clear of liquidity, they are coming to sweep your stop loss. They are coming to, they have seen where your stop loss is, they have seen where your orders is, they have seen where a lot of people are looking at. They know that they know that look, they know that a lot of people are looking at selling from here. These big players, they knows that a lot of people are looking to sell from here. They knows that. So, and a lot of pending orders as well is resting here. Maybe sell limit is a lot of it are resting here. Then see what they will do. They will just activate that pending order, moves into again and sweep all their stop loss and start going their way. So it's going to be a painful experience, but these are one of the things we experience in this very forex market. But let's say you did not fall for this trap, that you spot this very thing. This thing will enable you to know that this order block is what? Is valid. Because a valid order block need to sweep what? Liquidity. This is how to sweep liquidity. This is how sweep of liquidity work. This is how what they call it, traps work. So a valid order block need to sweep liquidity and need to have what? Inducement. So in terms of buy, this is how it looks like. A lot of people are looking at here to buy. A lot of stop losses are resting here. A lot of pending orders are resting here. They will come and sweep it out and goes in the same direction, break a structure. Now your own is that you need to bear this very thing. When market is coming back, let's say you are looking at trading from this zone. What you should be looking at is, where is my trap? Where is my inducement? These are your inducement. This is your inducement. So you see, the market has given you a clear of liquidity and the market has given you what? Inducement. And you can see when they elude people here, they took them out, mitigate this extreme order and bought what? Massively. So you see, so if you are again looking at trading from here, there is no clear of liquidity here. There's no clear of liquidity here, and that's why even after market lured early buyers in, it took them out and gave you a what? A clear of what? Liquidity, by sweeping all these stop losses, in which we say that a valid order block need to have a clear of what? Liquidity. And you see as market just sweep it out and then bought what? Massively. So if you want to mark out your order block, it should be from here because it sweep what? Liquidity. Because it sweep what? Liquidity, and it gave you what? Inducement just before your what? Order block. So this is how inducement and clear of liquidity what? Works. They are not the same. They are not the same. They are totally what? Different. So in the next video, we'll be looking at the chart to see how we will spot countless clear of liquidity, valid order block, and inducement. You see how it looks like. We are going to use three pairs and show you how this very thing what works. So I would advise you to also watch the next video.